This is the current stock market update for SoFi Technologies, stock ticker SOFI. Before we begin with today's stock market analysis, if you find these educational materials to be helpful, please remember to click the like and subscribe buttons. Leave your thoughts below in the comments section so that other traders can find this information more easily on the platform. What we are looking at here is the daily time frame. Each candle represents a full day's trading period. And I wasn't really planning on doing a SoFi video today. I probably have better things to be doing, but one thing that caught my attention, just sort of opening up the internet and looking at things, I did notice that there were several mentions of this thing called a death cross pattern, as we can see here. And interestingly enough, this is currently happening with SoFi stock. This is what occurs when the 50-day moving average crosses below the 200-day moving average. In my opinion, it's not as significant as people seem to think it is. It just has sort of a catchy name. In reverse, it's called the golden cross. So if the 50-day moving average crosses above the 200-day moving average, that would be a positive sign. And what I thought was interesting here was, for some reason, I was looking around here, and for some reason, there is an explanation of this on the SoFi website itself. Now, this was not written today. This is from 2023, and it's just sort of a broader kind of a technical analysis primer or an explanation. And I was kind of looking through here quickly, but then I realized, I don't think I'm really interested in Anthony Noto's view on technical analysis or anything like that until I saw one part of this article here. And that would be this section right here. It says, "Is the death cross a reliable indicator?" So what would that mean? Well, in my view, if something is a reliable indicator, you can use it for repeatable trading strategies over time. I do have my own opinions on whether or not this is the case, but what I thought was interesting was right here. It just says, historically, the death cross indicator has an impressive track record as a barometer of the broader stock market, especially when it comes to severe downturns as noted above. Now, I just thought that was interesting because that's exactly what SoFi stock is doing right now, is it not? We saw this kind of significant rally, as we can see here, and then we see a severe downturn, just as it said in that article. And what that article claims is that when you see a death cross during a severe downturn, it tends to be a very reliable predictive indicator and suggests that asset valuations are likely to continue moving lower. In this chart, you can actually see that death cross. What people normally use is the simple moving average. I do not use the simple moving average. I use the exponential moving averages because I actually know what I'm doing. And the exponential moving averages are different because they give different weight to more recent price action. And I do think that tends to be much more important when we're doing this type of analysis. But as we can see here, this red line crossed below the blue line. This is actually not even a new event because I do use the exponential moving averages, but this would be the death cross that they're referring to. And I just thought that it was interesting because whoever wrote that article way back in 2023 probably didn't know that they were going to be applying that logic to a situation like this. If I'm being completely honest, I don't necessarily ascribe much importance to the quote-unquote death cross. I think that that's just sort of an extreme sounding term that's used. It's much more important to kind of visualize, just due to the fact that the shorter term moving averages are crossing below the longer term moving averages. That can be an indication of major changes in momentum, but it is still just one piece of evidence. And I do think that you need to look at other things. Unfortunately, for people that are holding SoFi, there are other pieces of information which do point in that same direction. So even though this article didn't mention things like the moving average convergence, divergence, whether or not there's weakness out of a rollover, out of oversold territory, breaks of trend lines or support and resistance levels. I mean, you never look at one single piece of evidence when you're doing technical analysis. That is not how this works. I am still bearish on this name for more fundamental reasons. I just think that the meme stock hype is done, and I think that that's going to lead to further movements lower. But I do want to end the video with one positive note here. As we can see, I've outlined this price zone here because what we can see is that the stock is actually showing a little bit of a bounce near the 61.8% Fibonacci retracement zone. So that is significant. As you can see, that's this sort of green box down here. That's significant because the 618 retracement is the most important retracement zone. That number 0.618, that's what the entire Fibonacci sequence is based on. It's important throughout the universe. If you look at it like the way that a seashell is formed, for example, that circular shape in the seashell, that 0618 number is very important throughout the universe, and it's got several applications in trading as well. And as we can see, the stock is actually seeing a little bit of a bounce from this area. Personally, I think that you need to see a bit more follow through than this. I wouldn't start to get excited about it just yet. And if we do see a crash below, in this case, it's going to be about 1620 or 1630 is where that level rests. If you do see a break below there, you're probably looking at, it could be a 100% retracement at that point. In many cases, that is what you tend to see with those types of price moves. In this case, what that would lead to, you're not going to believe this, but that would lead to a price test of $6.10 if that were to occur, because that would be the 100% retracement of that move. So I'm not necessarily saying that I expect prices to travel that far, but I do think that you're definitely looking at the low double digits with a piece of shit stock like SoFi.